So this technique is a wonderful technique, and it tells you exactly how to get into the market, how to get out of the market, gives you precise stops and gives you precise targets. So let's get into it. Here is a chart of the pound USD, and what I'm going to do is show you exactly how I do it. So the first thing we want to do is we want to jump onto the 4-hour time frame, and all we're going to do is simply mark the previous swings. Now we've got a swing down here, and every low swing I'm going to mark with red, and every upswing I'm going to mark with blue. So let me change the color of that line. And the reason I'm doing that is to simply give myself an idea of where there was previous liquidity. So that's red, and I'm marking that one because that's a little swing low in this push up. So I can also mark this one, and of course this one's going to be blue, as it should be because it's a swing high. And we've got another little swing there, which is a swing low. It's this one here, so I'm going to mark that one as red, and that actually gave a very good trade. So let's jump into what we can see. Well, what we've got to look for is we've got to look for a market, the 4-hour swings, because the 4-hour swings are the big ones, and I could probably put that one down there as well, just for correctness. So you can do this at night, you can do this at the weekend. You simply want to mark out the previous swings, highs and lows, and if I'm going to be realistic, I'm going to put that there. Now technically you could say, well, isn't that a little swing high just as that was a little swing low? And the answer is yes, it could be. So just for completeness, what we're going to do is mark all of the swings like that. So once we've got them marked, the rules are quite simple, and I'm going to go into that in the next section. What you're looking for is you're looking for a sweep of a previous swing, and you can see that we got this sweep of this swing just here. So what do I mean by a sweep? Well, a sweep's quite simple. Let's say that we've got a low like that, and the market's trading, and it breaks that low, so it comes down and it pushes into the low like that, and then it virtually instantly reverses, as it did in this case. That's telling you that that was a sweep of liquidity here, i.e. the market makers were going down for the poor people that put their stops here, and once they had their stops, the market didn't want to stay there and it quickly rebounded. So what I'm going to do is go down onto the 15-minute time frame. We're going to look at exactly what the signals are for going long on that trade, and that would have been the area you would have marked on your 4-hour chart, and your target would have been this level here. Why? Because that's a previous swing, and that's often a good target. So let's go. So we're using the 4-hour chart for entry levels, and we're using the 15-minute chart to tell us when to get in. So as we swept the liquidity under here, i.e. we went for the stop orders, we created a really lovely pattern, and that pattern is a liquidity void to the downside and then a liquidity void to the upside, and this is a very nice pattern to look for. So let me draw those liquidity voids in. So we'll do the down one first. So as this market fell, you've got this level here, which is the start of your down void, and it goes down to the top of that candle there. So I'm going to make that one red. Now when these liquidity voids actually sweep liquidity and they actually form counterbalanced liquidity voids, i.e. one down then one up, that's a very strong signal that that is a market reversal. So the other one, the up void, virtually overlapped perfectly, and we'll make that one green. So that's the entry there, and that would have been a very good signal that something was going on. Now liquidity voids are a 3-candle pattern, so we've got one candle, second candle, and then the third candle. So only when you get the overlap in this candle where it doesn't actually overlap, i.e. that would be an overlap, that would be a non-overlap, then we get the liquidity void. So that would be the liquidity void in this structure. So let's ask the question, when would you have known when to get into that trade? Well, you would have known on a close of this candle here, and that would have told you you've got your liquidity void. So at that point there, you could have gone long on that close, which would have been here. And what's the profit target? Well, the profit target is twice your risk. Now, your risk would have been down here because the market swept liquidity. It formed two overlapping voids that told you something was going to happen, and that would have been your entry. So that would have been your stop. Let's have a look at that and see what that would have been for us. That stop would have been about 28 points. So now we've got to get double. So if we've got a 28 point stop, that's a 56 point target. So that's 1 and that's 2. So just copying that move, that's a 2-to-1 trade. And we can see that you would have got out on this bar here. Now, good chance, because we're looking at the 4-hour chart, that the market would have gone to that line there. We got out at this point here and the market went slightly higher, but you still made money. You still had a 2-to-1 trade, and it was really easy to spot. And that is how you look for a bullish buy formation at an H4 liquidity zone. Sweep of liquidity, two liquidity voids, one forming in the opposite direction to the other. You know when to enter and you know your targets. If you like this video, please give me the thumbs up, and please subscribe to the channel, because I haven't got enough subscribers, and if I make these wonderful videos for you, you could show your appreciation by subscribing. Well, thanks very much, and I'll see you in the next video.